Hi, this is Sive Morten with the daily update on EURUFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Let's take a look as usual on the euro currency. So yesterday we have talked about the possible upward breakout because market was showing tight consolidation below the confluence resistance 1810, 1854. But as you can see, yesterday we haven't seen any attempts of to pass through this strong area. And although we're talking about existence of the strong bearish momentum, and we tell every time that sooner or later, but deep retracement here should happen. It should be either 618 or even right back down to the previous lows, but it should happen. It's just how market works, because when the market has very strong bearish momentum that lasts for months, this meaningful with the minor retracements have been done, so it sooner or later, but it will press on the market and will just push prices lower, because to change the direction, market needs first to fade, to reduce the impact of the momentum, and this usually happens when the deep retracements. So this is like the spring in the car. So when something heavy is pressing on it, it needs to move slightly lower and then starts some opposite action. But the major concern, the major question on the euro currency is when this will happen. So first we were expecting here that should happen here, but this hasn't happened, and market is continuing higher. Yesterday we saw that market stands in the tight consolidation below the strong area, and usually tight consolidation indicates the possible upward breakout. So we have come to conclusion that we need to take a look at the 1750 area, because this will be the key to understanding on the common performance, on next performance on the market. So breakout of the 1715 lower, it will mean that retracement is starting, and we should be ready for a deeper action to the downside. While market stands above the 1750, it keeps chances on upward continuation. Yesterday, guys, you probably know that it was not really bad inflation data in United States, so it also brought some support, and this drop also could be some careful action from the investors who do not want to take any aggressive steps at the eve of the Federal Reserve. They do not want to anticipate the results, because Fed could give the hints on the possible more rate increasing this year. That's why investors right now just stands some defensive position. So, and no challenge of this confidence happened yesterday. So what we could keep an eye on today, mostly on the daily chart, nothing has changed significantly, and since market hasn't broken yet 1750 area, and keeps chance on the possible upward continuation. On the 4-hour time frame chart, this is the triangle pattern that we have discussed yesterday, some kind of pennant. Market also keeps well at the harmonic swing yet, because no breakout has happened, as I said. And market right now calling is a very tricky area. So this is very close to the crossing of the different lines, the support of the triangle, neckline of the hand shoulders, and 1750 fib support. So these areas, guys, I call as the culmination point. The feature of the culmination point that it doesn't increase your chances to success, but it provides you the point where you could place tightest stop to your position. So here your risk for trading will be minimum. So risk reward at this point stands at maximum area, maximum level. But the balance between the possible success and possible defeat stands as in any other point of the market. So why this I call as a culmination point? Because if you take a look at the hourly chart, you will see the market is forming catalyst equal to buy pattern, and its target stands approximately 1728 So, but this point is higher than these lows, and this catalyst to buy will be valid. That's the point where you will have to make the decision. Would you like to take the long position or not? Because if you will take the position right here, you could place stops just few pips lower, probably below the support area, below this low. So your stop will be very small, very close to your position. And in the case of the success, you will get the maximum risk reward ratio, because if somehow market will hold above this area in somehow reestablish upward action, upward breakout indeed will happen. So you will take right position right at the minimum, right at an extreme point. That's why this point is culmination. Another reason why I'm calling these points as a culmination point, because this in fact where destiny of the market will be solved, because actually this is the edge between the bullish sentiment and the bearish sentiment. So breaking down, and market turns short-term sentiment and overall context to the bearish, turning up again and keeps the bullish sentiment. So this is a very important border for a short-term perspective of the market. The market right now stands right on it. This is, as I call it, aggressive way of trading. So you're taking bet on the maximum risk reward, but you also gives the probability on take more risk, because you do not know, you do not have really clear signs that maybe this will be reversal, except maybe this bullish pattern that's forming. More conservative way of action, it's just waiting for clear signs. So for example, on the here or 4 hour time frame chart, if you would like to take the long position but you do not want to take the risk right at this point, you could wait for some progress. If market indeed will start move higher, here will break this triangle up, move above the OP target 1845. In this case, you could try to take the position on minor retracement, and it's also a good approach because target stands at 1960, although we're waiting for 120, 121 in general on the weekly chart. But let's focus even on 1960. It's pretty much room till this target, and if you take the position on some retracement, your risk will be smaller because you already will get the action in your favor. The same is true for a downward action. Here's also culmination point for the bears, so you could, for example, anticipate the possible breakout, taking short position here, is anticipating of the further drop. Or you could wait when the drop will start and then try to take the position on the retracement. But these guys taking the bearish position, short position right now, it's only for those who trade on intraday charts, on the hourly chart and lower, because our context right now on the daily chart on the weekly, we are waiting for a deeper retracement up, and this drop probably should be treated mostly as an opportunity for trying to take the long position here. So that's actually all that we see right now on your accounts. Not much new, but still this moment right now is very important, because today, guys, as a result of the Fed meeting and Fed statement, we could get the new inputs, new information, and market could react really strongly. So standing right at the edge, right at the border between the bullish short-term scenario and bearish scenario, it's really very tricky moment. So choose your way of trading that you like more risky approach or more conservative approach, and just follow your trading plan.